Today, we're going to do a little behind the scenes. Instead of talking about a specific income stock or ETF, I'm going to show you how I choose them in the first place. If you're retired and you want a yield of, say, 8 to 12%, there's no one magic ETF you can just buy and be done with it. Most investments with yields that high are not great, but some are, and I find them using one website more than any other. Over the past 84 videos, I've referenced Seeking Alpha hundreds of times, and I've assumed everybody uses it in a similar way. But last week, I watched some reviews and tutorials and realized that's not the case. I don't use 95% of the features shown in these videos, nor do I use any of the features on the homepage. So today, I'm going to keep this really simple. I'll just walk you through the 4 tools that I use the most as an income investor. As Tom Cruise said back when he used to make comedies, show me the money. So the first thing I look at is income. Ideally, I'd like to see a distribution chart that looks something like this. If the payouts are increasing, that's fantastic. But if they're flat, that might be okay too. What I don't want to see is a trend of distributions shrinking over time. These charts are easy to find. Just enter a ticker, click on dividends, then dividend history, then max to see the complete history of distributions. One thing I didn't know for the first few years I used Seeking Alpha was that special dividends are shown in grey. For example, this chart shows income from Southwest Capital, and these bumps look a bit odd. Well, this 97-cent payout is actually comprised of a regular dividend of 50 cents plus a special dividend of 47 cents. That's important because when financial websites quote a yield, they don't include the special dividends in the calculation. Capital Southwest investors are currently receiving a yield of about 10.7%, and if the company decided to pay out a special dividend next quarter, it would be in addition to that 10.7% yield. Retirees are all about the income, but we also need to ensure that our assets aren't eroding over time, which brings us to total return. Now, before I get into that, I want to thank Seeking Alpha for sponsoring this video, and you won't have to fast forward past an ad read because there isn't one. They didn't send me a script. They didn't even send me bullet points. Their only request was to share how I use their platform to choose income investments. I asked them if they want to approve this video before I put it on YouTube, and they said, "Nope, we trust you, just do your thing." Let's look at total return, because in some ways, this is even more important than the income. If you drop a ticker into Yahoo Finance or most other financial websites, they'll give you a price chart. The problem for income investors is that this ignores income, which is the whole point of income investing. For example, SVOL is one of my top 10 holdings, and on a price chart, it looks terrible. If we compare to the S&P 500 since SVOL's inception in May 2021, the S&P 500 kicks its, well, you know what. But SVOL is designed to deliver its returns in the form of income, not appreciation. So the best part, the 16% yield, is missing. A total return chart combines the price and the distributions paid. If we look at total return over the same timeline, it's a different picture. They're much closer. The lead changes depending on the market conditions. As I record this, SVOL is actually a nose ahead. It took me a while to find this total return chart the first time I looked for it on the website, so let me save you the trouble. You enter a ticker, click Momentum, then scroll down to Total Return versus S&P 500 Total Return. There are preset time periods, but I wanted to begin on the day that SVOL was launched, May 12th, 2021. So I used the custom date. Even though it says S&P 500 on this chart, you can compare the total return to any stock or fund. I'll click Add Comparison, then compare it to JEPI. We can see the lead switches between these three depending on market conditions. If I want to make the SVOL JEPI comparison simpler, I can delete the S&P 500 by clicking this little circle that appears when I hover over the rectangle. We can see that during the 2022 bear market, JEPI was actually ahead. Feature number 3 lets me see which BDC is cheaper than another BDC relative to its assets. I don't use this one as much, so I'll show this one quickly. By the way, a BDC is a private lender. ARCC is a BDC with a long history, a good reputation, and it's the biggest BDC by far. It also yields just over 9%, and that makes it a good yardstick if you want to compare another BDC like Capital Southwest. We can do that using the price-to-book ratio, book meaning their assets. If we go back 5 years, we can see that ARCC is consistently valued very close to its book value, represented by the number 1. Capital Southwest's price-to-book is generally higher than ARCC, peaking at almost 1.75 times book value. And when the market corrects, the valuation shrinks down to a number closer to 1. If you're an investor that likes to time your purchases, as I record this, CSWC is considerably more expensive than ARCC on a price-to-book basis. To access this chart, click Comparisons over on the left, then click Create New Comparison, enter the tickers, then click Compare. This feature can measure 50 other metrics, but I'm only showing you what I use frequently. Otherwise, we'll be here all day. If you're an income investor, the articles are the most important feature, and here's why. It's the only place I can get the information that I want. I mean, information like how it makes money, what are the risks, and why it pays such a high yield. The internet doesn't answer those questions, at least not for free. If you Google an income investment like that 9% yielder I mentioned a minute ago, ARCC, the finance websites don't really tell you that much. Yahoo Finance will give you a 1-paragraph summary of the company and some financial ratios. Investing.com, Nasdaq.com, and MarketWatch, same thing. It's just numbers and some AI summaries. I want some analysis by a knowledgeable human that's actually familiar with this company, not just a list of data scraped from the internet. If I type ARCC into Seeking Alpha, I'll get what I'm looking for and more. The last analysis article was uploaded yesterday as I record this, but my favorite recent analysis is this one, which was written last week by ADS Analytics. And in that article, they explain the good news, like an increased focus on first lien loans to reduce risk, the bad news, including the troubled plural site loan that has affected several BDCs, and in case you're wondering, they conclude that ARCC remains an attractive hold. And if I scroll down, there are hundreds of articles on ARCC going back 15 years. If you want to become an expert on this company, this is the place to do it. If you're wondering why so many analysts write detailed articles about a company most of the public has never even heard of, it's because Seeking Alpha pays them to write those articles. There are no ads, the money comes from subscriptions. If you put articles like that on Yahoo Finance's website, they wouldn't get enough clicks to generate ad revenue. It just wouldn't work. A quick word on these color-coded buy and sell badges. They let you know the author's outlook on the investment without having to read the whole article. I use these in 2 ways. First of all, if I read positive articles with green buy badges, that's fine, but I'll search for at least one red sell article for the opposing view. I want to understand both sides and then come to my own conclusion. Secondly, I think it's an oversimplification to say that more green badges means one investment is better than another. It may just be that more writers who like the investment have written more articles, but if I see more red sell badges than usual, I do take that as a literal red flag, and I'm much more cautious about the investment. And that's just because it's human nature to write more articles on investments you like. In some of my videos, I've quoted specific authors, and over time, I've developed a few favorites. In addition to ADS Analytics, who I mentioned a minute ago, I also like Trapping Value, Colorado Wealth Management Fund. They write some good ones. And, of course, Stephen Bavaria, who explained his income factory approach in a recent interview. The last point I'll make about the articles is read the comments. Don't skip them. I'd estimate that 10 to 20% of the useful little nuggets that I find along the way are in the comments, like that handy VIX term structure website I mentioned in a recent SVOL video. What about Morningstar? They have analysts and produce reports. I tried to compare them to Seeking Alpha by using their free website and the free reports offered by their partnership with Charles Schwab. I logged into my Schwab account and typed ARCC, no report. While I was there, I reviewed the reports that did show up, and every single one of them was an AI-generated template of data. no sign of a human author who even knows what ARCC is. I thought perhaps the only way to get Morningstar's analyst coverage on ARCC is to pay for a subscription. It's $249 a year if you pay up front. Thankfully, there's a free trial, but I had to give them my credit card to see the full version, all in the name of research. I did that and once again tried to learn about ARCC. The result was the usual financial data that's available on free websites, and more importantly, I learned that Morningstar doesn't offer any reports about ARCC. I thought I'd give them one more chance, so I entered SVOL, S-V-O-L. This is a billion-dollar ETF from Simplify, and as I mentioned before, it yields about 16%. Morningstar gives SVOL 5 stars out of 5. Is that good? They give Apple 2 stars out of 5. It seems a bit odd. Back to SVOL, and I noticed Morningstar also awarded them a bronze medal. It doesn't specify if that's for shot put or the 100-yard dash, which is my sarcastic way of saying I don't understand their rating system. Let's move on to their research about SVOL. I read their analysis, and it's clear that it was written using AI, and even the AI doesn't understand what SVOL is. It compares SVOL's performance to the Russell 1000 index. They have nothing to do with each other. I found no useful analysis of SVOL on Morningstar. Needless to say, I cancelled my free trial with Morningstar about 4 hours after I signed up. Perhaps Morningstar subscribers that pursue other investment strategies like growth or dividend growth are happy with the service. From the perspective of a retired high-yield investor, it's not for me. Let's finish up with who I think is a good fit for Seeking Alpha and also pricing. Now, just because I use Seeking Alpha doesn't mean it's ideal for every investor. I think it makes sense if you fit the following criteria. Number 1, you do your own research instead of outsourcing it to a financial advisor. And number 2, you have a diversified portfolio. So a growth investor that just holds VOO and QQQ for 20 years doesn't need all this information. Same for a dividend growth investor that just holds, say, SCHD. But for income investors like me that are always looking for new ways to diversify their income stream, it works well. There's a free version which lets you sample a lot of the Seeking Alpha features. The premium level of membership is priced in the low to mid 200s as I record this. There's also a pro level, which is far more expensive, but I think 99% of the users are on premium. That's what I use. There's a link in the description that will give you a discount. I don't want to quote exact numbers because by the time you watch this, the price might have increased or there could be a promotion running. Things change. The value in terms of finding good investments and avoiding bad ones is easily a 2 to 3% swing in the performance of my portfolio. So a couple of $100, that's fine. Also, to put it bluntly, I just can't buy this information anywhere else. Seeking Alpha is the only website or app that I use on a daily basis. That's partly because I can get the income and the performance charts I want in a few clicks. But there are ways to get those numbers from other websites if you hunt around. For me, the real value is in the analysis articles. I tried to compare them with the competition, but I'm yet to find anything that I can classify as real competition, at least not for an income investor. And that wraps it up for this look at how I use Seeking Alpha to analyze income investments. More Armchair Income coming soon.
Armchair Income, that's my hustle and my groove.